Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Lucky. And how about YouTube? Thanks, Dan. Well, good morning, everybody. Appreciate you stopping by the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream is about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. Can you guys still hear me in Discord? Okay, great. Thanks. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars and the actual community itself. It is a group of like-minded traders who've come together to leverage their collective experience so we can all do better. The thing about trading is most retail traders really don't understand the business they're in, and the objective of Trader Lab and the reason I agreed to do it was my own experience as a developing trader. I started in 1980, and what I went through nobody should go through, and part of it was there was no information. When I started trading in 1980, we didn't have really off-floor traders, and technical analysis, as you know it today, was really primitive. It was in its early iterations. Previous to that, it was classical bar charting, head and shoulders, all this kind of stuff, pennants. And that's the first thing I learned in my trading journey. So I thought it was about measured moves and prediction. So I started out with the idea of predicting what was going to happen. And there's nothing further from the reality of trading than being somebody who predicts something, because then you focus all your energy on, quote, being right and saying what will happen. Well, the issue, of course, in the real world of trading is we don't know what's going to happen because it's not up to us. It's up to really the voting, if you will, of the participants at any moment in the market or a news event or anything. Or fat finger, it doesn't matter. So actually, what trading is, and this is quite divergent from what most retail traders think it is, it's not about time frames and indicators. It's really about understanding how the market works, why it does some of the things it does, why it rotates across itself, and that are there times and locations, you might say, or places where you might anticipate potential behavior, and those becomes what is called structured trades. And I share 60 PDFs of these in the Trader Lab as well as the webinars. Now, the thing about a structured trade is why a structured trade? Here's what's really important about this. If instead of being in a business of prediction, which puts us on a path of confirmation and certainty and being right, all logical elements, they have nothing to do with business. The business is one of gaming. The way the casinos operate is the business we're in. I never thought of it that way. When years ago someone said, "Oh, you're just a gambler," and I was like taken aback by that. No, I'm not a gambler. I'm a trader. But in reality, I was a gambler. I just didn't know it. I didn't understand. I was sitting in the casino, but I was on the wrong side of the table because I was the gambler. I was looking for certainty, and I thought more indicators, more time frames would create more certainty because it's all logical. But why are we moved to seek certainty? Because of our aversion to risk and pain, or the saber-toothed tiger. The casinos are quite willing to pay the gamblers, and they pay them all the time and even give you the cocktails and the ticket to the buffet. How can they afford to do that? Because they're only playing structured games. Well, in the Trader Lab, it's about structured trades. I guess you guys see kind of where I'm headed with this. So That's what the Trader Lab is. And if you're interested in the business of trading, not the fantasy, you're all invited to Trader Lab. There's a link in the bottom of YouTube and there's no cost. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only, and these streams are available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer, screenshot, and build out your trade plan. And yes, trading is a planned business. It is not a prediction-based business. It's about having a plan. When your trade shows up, you show up. You put the trade on, and then you have a trade process. And in the Trader Lab, it's a minimum 2-lot configuration. 2 lots, so the first contract potentially buys the stop on your second contract. So the worst that happens, either you take a full stop on 2 contracts, and that's life in the lane, as we say, or you get a scale and then you take a stop and you scratch and your broker sends you a gift basket, or you get a scale, you manage your trade, and you go on to your target, or you get taken out on a trailing stop. That's it. Now, where do you interact with the other participants? That is the question. And every retail trader wants to know setups. Well, there's 60 PDFs. You can reverse engineer them, make them your own, and it takes time. I don't use indicators, so how can I trade the market? Well, I replaced indicators, and by the way, this is what the PDFs look like. Circles, arrows. There's no course. Doesn't cost you anything. It's all free. And these are actual trades I took and just things I did because traders were asking me what you're doing. It's a broad stroke. You actually have to roll your sleeves up. And if you want to be in the Trader Lab or you want to become potentially create a career in this business, you're going to have to do something different than what you're probably doing now, unless, of course, you have a edge. Now, an edge is not random winning trades. We all have that. There's the illusion. I just have to make it better. I did a webinar on it called Trader Groundhog Day. How many times have you gotten excited and thought, I've really got it locked down now? And you have winning trades, but you're still losing. That's because you don't have a statistical edge. You're just experiencing random outcomes. And we all have strings of winners and strings of losers. So what's the difference? Come to Trader Lab, you'll see. Now let's talk about the market very briefly. Obviously, we're in a bull run. You haven't noticed, welcome to trading. And yesterday was a very unusual day. If you remember yesterday early in the morning, I was looking for shorts because I was looking for us to take out this low and possibly come down to 6,100, get into the gap, take some of these longs out in this day before yesterday. And it failed to do that. We actually have a double bottom there, which is a weak low. So I anticipate some point down the road we're going to return. But in the moment, no. So where were our targets? Once we failed here, then it's yesterday's high, which was a target, and then 54 is the outside target. Now, we had a lot of conversation in Trader Lab yesterday about something called 12 to 1 stat, which means we were looking for it to make a new high for the day, and this is our target. Now, I want you to see some symmetry here. I'm just going to spend a moment and I'll move on. This is the auction. Let me see if I can. No, maybe I can, maybe I can't. This was resistance on this day. That's one tick off the high of the day. This is resistance for yesterday, 61.54. The actual location is 54.50, high of the day 54. We got within 2 ticks. So what about today? This is this morning before the RTH opened. So what are we going to do about today? Here's what we're going to do about today. Since it's Friday, and we can anticipate over an 80% probability, past performance not indicative of future results, that we're going to test either yesterday's high or low. I don't know about you. I'm leaning towards the high, all things considered, and considering where we opened, that we're going to take this out. If we take it out, we have resistance around 58.75-ish, and a potential target at 66, and these are not trade recommendations. These are levels created by the auction. This is called the volume profile. And if you haven't seen this, you're going to think, what's this all about? The profile is really all we're doing is looking into participant behavior, volume. Because when you go shopping, and this is really shopping, trading, but shopping. So when you go to the store, if the price is too low, you throw a couple extra in the cart. If the price is too high, the volume tapers off because less people are willing to buy it. Now, somebody has to have the can of tuna for the casserole tonight. They might pay a high price, but not a lot of volume will go off. So that is how this profile works. What's too low? What's too high? And inside the volume, where the volume exists, is like a retail price. Think of it like a store. This is like a store. So in this store is a retail price, and you can see there it's high volume. Just give me an example. If this price is too high, we can leave it. If it's too high when we come back, we can reject it. Just giving you an idea. So now let's look at the RTH open. If you have questions, please post them. I can't see them as I'm narrating this, but I want you to see how understanding market mechanics might give you an edge. And again, you have to vet everything for yourself. So this is yesterday's settlement. This is the RTH open. Yesterday's high, remember, high probability. What else do we have above us? ETH high, high probability. Past performance not indicative of future results, over a 90% probability here, about an 80% probability we take these out. If you're in the Trader Lab, you'll be going, well, probabilities favor the upside. Look at yesterday. We closed up on the high. Do you think we're going to take yesterday's low out before we take out yesterday's high? I don't know about you. I'm betting for this. And that's literally what you're going to do. You're going to place a bet. So I know this was my target, 54.50. And I know I tested the ETH high. I'm sorry, the ETH high is here. So I tested this. I'm up here. 90% probability. My first trades I'm looking for are longs. In fact, I was speaking with one of our members, participants in Trader Lab, and we actually went through a narration this morning. It was very interesting, where we were talking about the market and actual trades. So we were looking at this and a couple others, which I will share with you. And these are trades that were narrated with this individual. So let's look at the market. Market opens. This is the developing volume point of control. This is the retail price. I'm going to label it. I call it a variable high volume node. You'll see why this is important. Now, I have developed, and it's not rocket science, it's just you're operating in an uncertain environment. That's very difficult for us. I've developed a way to narrate the market in real time without indicators, because all I'm doing, and it's really not complicated, it's just very foreign, to most retail traders because they spend their life with indicators and time frames, which I understand, and thinking that that's what trading is. After all, why would you have all those indicators in your toolbox, right? They must be good for something. Well, maybe. But if you understand actually how the market works, this is where it's actually taking place. And the way it takes place in the volume is the pricing, the shopping. Where's too low? Well, part of the joy of trading is we don't know too low, too high. But what we can do is we can look at probabilities, we can look at what's called context, and then we can try to get in alignment. And I'm going to underline verbally the word try, because there's no such thing as prediction. There's only maybe. The other part of this is, and there's a term I coined called you got to anticipate to participate. So in structured trading, you're not making it up. You're going to say, well, where's my trade? Here's where my trade is. Once I see my buyers, and why did the market go up here from here? Great question. Why did it go up? Well, we don't know what's going to go up. Nobody can predict. But here's what I know. I know right here, first of all, I have the heat map, so there's liquidity in the limit order book. That's what this is. I see 20 sell stops coming out. Thanks for playing. And then I have a buying iceberg in here. So I see I don't know, right? Going, where's it going? I don't know. So, but here I see the buyer. Here at RTH open, all this is in the first couple seconds. This is where my volume is. This yellow line is called developing volume point of control. It starts at 0 RTH open, and this is where the volume is. As the price and the volume move away, the volume point of control is going to shift. Now it's over here. I'm going to label that. Now this is settlement. We're going to get rid of settlement. We don't need that anymore. And this is process. So just follow process. I'm not saying this is the only way to do this. I don't know what, I just have, this is what I do. And I believe in simplicity. I complex, we always think the answer's in complexity, more indicators, more this, more that. I did trading systems. I thought you want to do complexity, you go with systems. And that didn't work for me. It was no different than what I was doing when I was manually tuning and tweaking, oscillators and the rest of that stuff. It just did it more on steroids because I had a computer do it, so I made it more complex. So it was more curve fitted. That's all it accomplished, was tighter parameters, and then the market doesn't operate in tight parameters. There's a lot of slop. So too low, break high. Now I see, okay, my buyers are back in the game. I have statistical probability here. I have this, right? So now I have to get long. How am I going to get long? Let's see. VPOC migration. Let's label it. Now follow the yellow brick road. This is Trader Lab. This is process. And like everything in trading, the best you have is maybe. Yeah, maybe. So what's support? Let's think of this as, once again, we're back in the supermarket of S&Ps. Too low. You can't buy an S&P here now. Sorry, Charlie. Retail price, S&P. Up here, new retail price, two possibilities. North or south. Watch. So I have support here. I have support here. This is a location for potential long. Now, like everybody else, just like you, my teeth start chattering because is this too high? This was my target from yesterday. Yesterday's high probability. But I have over a 90% probability to get here. What I don't know, of course, is will it ever get there? When will it get there? How will it get there? I know nothing. I know probabilities. So since I'm trading probabilities and not predictions, I have to be willing to take a stop to find out if it's going to go here before it takes the opening swing low out, which, by the way, is down here somewhere. I don't know. I can't quite see where it is. I cannot. I think it's here. So I'm going to label this. Guys, would you confirm this is the opening swing low, somewhere around 50? Trader Lab. Trader Lab, can you confirm opening swing low? Was it 50? 50 quarter. Okay, let's slice it in half. So this is the opening swing low. So here's what we know. First of all, we're going to talk about the long, but we also have to talk about what's going to happen here. What's under here? The buyers in this leg have sell stops here. So it's not unreasonable for us to come back and take them out. Here's another piece for the puzzle. There's about an 82% probability, since we're talking statistics, past performance not indicative of future results. I have to say that, by the way, it's a regulatory requirement. You got to vet these for yourself, that we get there and we get there. This is the overnight volume point of control. This is the volume point of control. This is a developing because it's moving. This is now fixed because it's from the ETH. In the ETH, this was the retail price. But it's closed. Theoretically, the ETH is over. So this is too low at the moment. So this is what I know. Retail in the ETH, over 80% probability I get here and I get here. overnight mid. Okay? Don't forget that. What else do I know? ETH high, 90% probability-ish I get there. And you have to vet these. They're all available in TraderLab. So what do I know? Buyers. What do I know? Stops under here. What do I know? Buyers are in control. What do I know? If it comes back down and I don't take these guys out under here, I need to get long to go for my statistic. I know it's kind of a long way around, but I have to tell you, this is TraderLab trading. Let's watch the language. So, too low, too low. What is this? Let me draw a line over here for you. I'm going to start boxing these things in, and this is kind of how you can learn. And this process is not a 3-month process. This is a process of understanding actually how the market works. Not as it's defined by an indicator, but how it's defined by your interpretation of market language. So what I found for me was, if I can understand what happens here, I can operate here. Let's look what happens here. Buyers are here. This was a micro auction. The volume is there. The volume point of control shifts up here. This is the new retail price. If I break below it, it's too high. If I come back here where it was too low, I can buy this. Structured trade. If I get long here, this is my resistance. There. So if I get long here, I can scale there. This is a structured trade. Now, there's more. I am going for the ETH high and higher. But remember the top of the stream. Opening swing low, I have stops, and I have over 80% probability-ish to get down here. So I'm working in 2 dimensions. I'm going, okay, long, but what else do we know? It's Friday. We know that. We know there's longs in the market and that we can get profit taking somewhere today. We know that these longs, these late buyers to the party, potentially can get taken out. They're just, whatever they're doing, they're getting in, but they're getting in at the top of something. And we don't know where the top of anything is. So if, as a trader, my job is not to predict. My job is to align. That's why this is a long against this. Stop goes under here. You'd be long here, scale there, and then you're holding. And the idea is to get risk neutral or limit your risk as much as possible, and then your stop has to be under here. Notice where we come. Out the top, ETH high, target. This is TraderLab. Just saying, this is what the business of trading is. If you think of it this way, it's also structured trading. You guys have any questions? This is very simple. All right, CMJ, 50-50. I'm just being told the opening swing low is 50-50. What do they say? 10 lashes with a wet noodle. I don't know who came up with that. So, too low, too low. Why does the market come here and do this? See, can you answer the question? I can. And that's why the language of the market is so important. If you don't understand the language, what is your indicator telling you about this? Can you trade in this? Well, if you're in TraderLab, you can. If you do the work and you vet the trades and you have the patience to control your emotional state. None of these things are easy because it's not natural to us. This is too low. This is too low. This is too low. This is too low. Where's your stop? Under there. See it? Where am I trying to go? There. And then higher. And we don't know to where. That's part of the thrill. So let's see. Where's my support? Isn't it here? So what does it mean? Trigger longs. Longs. Trigger longs. What does it mean? Microstructure is here. I'm not going to go too deep for you here. I'm giving you the broad stroke. These are longs. going there. So that's your scale, or you're scaled to get risk neutral, different conversation in the trader lab, and you're hanging out because we don't know where it's going, anything. Now, let's watch. This is a sweep. We want to be aware of this. It's not a problem yet. And all we know is we're going up. That's all I know. Now, trade management. Let's watch. Right here, I have a passive seller. Now, the trade management piece is a separate conversation for you guys because this is where, quote, time frame or fractal, and there's no time in this. There's just rotations, So I don't use time. And I like to make a point of that because a lot of us, including me, it was 5 minute, 2 minute, 3 minute, 15 minute, 30, 60, daily, monthly, whatever, weekly. Everything was very structured on time. The market doesn't operate on the clock intraday. It operates in rotations or fractals, so it's different. So what I try to do is follow the behavior in the auction. I don't know, where it's going, what it's going to do. It's not my job. So let's look. Chop chop is our microstructure. You see this out here? This is a high volume node. A high volume node is the same as this. This is high volume. It was micro high volume. It's down there. There's a little down there. There's some here. And then we migrated. Now it's up here. The developing volume point of control was here. So this was too high. This is the fair price. This is too low. So I'm operating in this. I break above this. Now I have a new high volume area. Let's look at it. It's right there. So what I'm doing is, these are distributions. That's what they're called. And all it is a consolidation. Very simple. You guys deal with consolidations all the time. And this is where most of us say, oh, I got chopped up. But did you ever stop to think that inside a consolidation is a story being told? You're observing and witnessing the auction between the participants. And what's going on here is that the passive buyers are sitting over here. That's why the market goes up. Buyer, buyer, seller. What's up here? Sellers. Can't see them. Why? They're passive. That's what the limit order book is about. So I don't know what's going on here. And I see the chop. As soon as I see the chop, I know my buyers are here, there, at that low volume area, right there. The retail price is there, and the sellers are here. Now, I don't know who's going to win. This is part of the joy. So I have a buyer here. I got my volume there, and I got my buyers here. So this is my support. This is my support. So right under here are the buyers. Up here are the buyers. The sellers are here. Watch what happens. Now the sellers are below the buyers. This is a question right here of, warning Will Robinson moment. Have you heard of Will Robinson, Lost in Space? The sellers are here. Now, two things can happen. These buyers might absorb this guy, and we come back up, and if I can take out the sellers here and get above this guy who was absorbed. So think of it this way. Sellers absorbed that buyer, absorbed the buyer. Buyers absorbed the seller. You see this? This is order flow. Now, I can't tell until I have change here that the sellers are below the buyers. They're now in control. In this little fractal, this space, I have the sellers below the buyers. They are in control. For this thing to go higher, I've got to get above here and take these sellers out. If I can't get back above here and I take this out, then I'm going to have a reversal. Long-winded explanation, but this is order flow. Notice, so far, sellers are still in control. Selling icebergs going off, 98 buy stops. Thanks for playing. Buyers are here. Sellers are there. High volume is here. This is your consolidation. If we're going higher, I have to lift from here. If I break this way, then I can come back here. Let's see what it does. There's my support. So what do I know? Variable high volume node. Break high, it's support, resistance, break low, support, come back across, resistance, break high, This is support. Break low into the next support. Outside edge. This is a micro mean reversion trade. In other words, outside back here, and then potentially continue higher. Or, if depending how you manage your trade, you're out of the long. It's all up to how your plan. So let's keep going. This is a report, 8:45 Central Time. Now, in using a sweep detector, this is a sweep, and this is off a report. And extremes can be made off reports, right? Who knows? So right here, you have your report. Now, if you trade into reports, fine. If not, you would be flat and you would not be in this. That's up to your trade plan, and you should know before the fact what you're going to do. Now, let's look at the microstructure in here. Now, when I see stuff like this, I don't necessarily trade it because I'm going, what's going on? I don't know about you, but that's what I do. I go, what's this? Because now I know if I get a counter rotation, I need to take this out. Because what's this over here? This is my volume. This is my microstructure. And it is right here. Let me get back here. I want to show you what it looks like. So this is an extreme. That's a report. So what do you do with that? So where's our volume? Let's look. You see this node sticking out here? Now, right here, no clue, right? And if anybody tells you they know, they don't know what they're talking about, in my opinion. Yeah, I know it's going to do this. I predict that, right? No. If you're trying to do that, you're not in the trading business. You're in the fortune-telling business. So, or you put an ad in the newspaper for tarot card reading. There's none of that here. There's only maybe. So maybe when I have this volume and I have my passive side here, I have a sweep here, and if I can't get back above this high, then there's trouble. So right here, I break. My buyers are here. My passive sellers are here, and my buyers are there. Passive buyers, passive sellers. It's a little box. I'm going to draw it for you. And I'm doing the drawings to help you visualize the language. This is language. That's what's going on here. This market is talking to you if you can understand the language. So this is your auction. Passive, passive. Break. Sellers are below these buyers. The sellers are now taking control. Buyers. So you could actually sell this or exit your long once you put these pieces in place. You don't have to be taking a short unless you're up, you're up for that, or you're just exiting a long as soon as you see this. And you might keep your stop out here because you're thinking, well, maybe it'll rotate. I mean, anything can happen, so you can't predict it. Let's watch the behavior. So break low, you're away from this volume. Now, buyers, so we know that we've got sellers in control. This is where we broke from. We know out here is too high, this right here. And we have our buyers. So buyers, buyers, buyers coming back here, right? Sellers are here. Now, I don't know until that. Now I know this is too high. Sellers take control. These buyers are under the bus. I pull back to this micro structure right here. That's a short. Why? Sellers are here. So the sellers are up here. They took control. There they are. Buyers take a shot back. No clue how high it's going to come back. When I get the selling here and these guys are stuck, I can use this volume right there, that volume, break, trigger for a short, and my stop needs to be here. Notice now watch the behavior. Notice why I'm using these levels, because there's language in this level. Break, trigger, test, short, test, potential short. What do you do? Well, subject to your plan, and you have to vet this, you put a limit order here. And I always give them 1 or 2 ticks, subject to, and then your stop would be here initially. Your job is to get risk neutral. So the distance from, call it 62 to 59, it's 3 points. That's in my wheelhouse. And it doesn't have to be this far, but you could always get picked. So in here would be also okay. Just, it's up to you. And now you're going for risk neutral, which is coming back here. Okay? This is called mean reversion. There's a name for it. And it's in the Trader Lab. It's a trade plan specific. Now, what else do we remember from the top of the stream? Where's the stops? Opening swing low. Where's our targets? Overnight volume point of control. What's the statistic? Over 80% probability. Can you see why I would take a long to wherever? This was the high probability, 90%. My next target is here. No clue. Not my job. It says level. There's a reason it's on the chart. Right here, no clue. I have this sweep off a report. So structure's a little dismantled right here. And as far as I know, I don't know, which is all the time. Right here, I get too high. So I have my resistance here. And now I break down. I can't get back here. This is where the short is. This is where the scale is. And this is where the target is. Let's see. Now, we have something else. Any questions, by the way? I'm going to kind of take a little breather right here. Target is here. Questions? Got any questions? How are we doing in YouTube? Please give a thumb up, a like in YouTube if you like this. Encourages me to keep doing the Trader Lab. There's no cost for this. It's a 24-hour, 7-day community of traders, all levels of experience, senior trader over 50 years. I've got 45 years professionally and out here with you. Just about everybody, I would say everybody in Trader Lab has done the same things you've done. We've all done the same things. It's just a matter of, are you going to keep doing it if it doesn't work? And then maybe you need to learn more about how the market works. It's not about how your indicators work. And I know I probably sound like I'm against indicators. What I'm really for is traders. And you can use indicators, of course, but you need to understand how the market works before an indicator, I think. So you could use them effectively if you want to, versus the other way, thinking the market is the indicators and it's just the right mix. I think you'll find that. So this has about an 80% probability this. So this is the target, okay? So now the way you would work this is you would manage your trade. This is too high. Remember, volume point of control. Too high. Break low. Where do I come back? I test. Too high. Where are we trying to go? We're trying to go here. So now there's another such scenario coming up, and it's called the IBF, which is a structured trade in the Trader Lab. The IBF is a mean reversion trade. So at the moment, we think that the trend is up. How about you? So if we think the trend is up and we're taking out the late longs at the opening swing low, and we have statistical probabilities of coming down in here, we want to be looking for longs then under here and back inside. So that's the next trade. So you're short, managing your trade. If it comes above your, however you're managing, which is like here, high volume, you see where the high volume is? I'm going to put a little. So sequentially, what I'm doing is I'm looking, these are called distributions. So basically it's too high, too low, retail. If I leave it and I come to a new location, it's going to be too high, too low, too high, too low, retail, which is what that is right there. And then if I come down here, it's too high, too low, too high, too low, retail. It's right there. So I use these nodes as a way to track the valuation of the participants. Think of these like stores. That's kind of how I relate to this since it's shopping. If the price is too high and the buyers are here, why doesn't the market go up when you see a green bubble? It's because there's a seller, and there's a selling iceberg. The buyers here, and there you see buy stops. Buy stops. What is that? Buy stops are market orders, so they show up in the delta as aggressors, right? That's why you see a green bubble. It's not like, oh, I want to get long. No, it's like I have an aggressor. What happens? That's what you want to know. It's not that there's an aggressor there, which is good to know. What's important is what happens, because we can't see the passive side. Now we see the icebergs, and this is the stop and iceberg detector, and I see the stops. So I know I've got 66 stops right here that are coming out and 198 icebergs selling. Well, that's like a lid. Now, if I keep going, then fine, but I don't. The sellers now are below the buyers. Passive. This says downside rotation. You see, that's how you read the market with order flow. Then I come over here. What do I see here? Buyers. Sellers here, and the buyers here, and now I break above. So right here, I know I'm getting a counter rotation. Where's my resistance? It's here. Let's see what it does. I don't know. Where was my resistance? Let's come back to that. There. Now I have another phenomena taking place. Now, guys, there's multiple time frames as you think of them. In other words, this is happening in multiple fractals. Think multiple time frame. This is the developing daily time frame. This yellow line's the volume point of control. This is the highest volume location for the day. These fractals are the same process in micro. So think Russian dolls, Matryoshka dolls, they're inside each other. So I'm trading vertically and horizontally. Vertically in a multiple time frame configuration inside that higher time frame I showed you at the top of the stream, higher time frame. Then I'm trading in the developing daily time frame, and then I'm trading in the micro time frame, all inside each other. Matryoshka dolls, Russian dolls. Too high. Why is it too high? Because my sellers took control here. Come back. Too high. Volume point of control shifts down. So now I have too high in the microstructure and I have too high in the developing daily structure. Where am I trying to go? Here. This is my target for the short. So we get our target. It's a wonderful thing. Watch. Now what? What is this? Now, there's a few possibilities. Right here, what do I have? Let's look. Going to zero, right? 428 stops coming out. Oh, the agony. Except that's our target. In the Trader Lab, it's a structured trade. You can learn this if you're inclined. Just roll your sleeves up. Be prepared. Now I have high volume here. I'm going to mark it. Let's see how we use the auction. Here, I don't know. Do you know? I don't know. 428 stops. Oh, it's terrible. Where's it going? I don't know. But what happens here? My buyers are above my sellers. And what makes it important? Location, location, location. Real estate. You've heard that? Location. Why is this important? Because the last auction was the ETH, full auction. And this was the retail price, or the highest volume from the ETH. So currently, in our current developing market, this is the high volume for the day so far. So the highest place for volume is right there. Down in the ETH, that was the highest volume. So I'm coming to a location that was considered a fair price. And if it's too low now, the market can go, no, it's too low, and it can come back. That's all I know. That's all I know. And I also think the trend is up. And at 9:30, I have something called the IB stat. That's called the initial balance. And in the initial balance, if we come back inside, it sets up a long, which is mean reversion. Now, there's a little problem here. Here's the problem. This is the mean. So I only have range from here to here, and then my next target would be here and up. So I'm looking for longs now. So let's look. So this here, location, chop, 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 chop. Absorption, buyers are now here, order flow. Here's my sellers. Why aren't we going down? There's my seller. Why aren't we going down? Absorption. There's the iceberg. Buyers, buyers. Now, I don't know. When I'm seeing this, no clue. Buyers are here. Sellers are here. For this to trigger, I got to get above these sellers. Now, here's a maybe. There's the break. Now I have a trigger. Now I get my seller. This is my support. This is my entry. My stop goes under here, and it doesn't go right there. It goes a couple ticks. Then I'm trying to come across, and you can scale any of these locations. And there's your VWAP. So for me, I'd be looking to get scaled because I anticipate. Remember, you got to anticipate to participate. I anticipate that since this was too high, and I got my VWAP in my mid, that there's a chance I'm going to get the VWAP and get sellers, but this is my target. So for me, I would front run the VWAP by 1 or 2 ticks for a scale. Watch. Where's my stop? It's under here, right? And now when I see this, I'll tell you. And I was with one of our Trader Lab participants, and we were narrating the market together this morning. And this is support. See the test? This becomes resistance. I break down here. Now here I thought it was going to be all over, and but this was my long. You see, so I'm long from here. Stop is under here. Now this breaks down here. I think the trade's going to fail. But part of having a trade plan is not being emotionally triggered. By the way, we all are. It's what you do about it. Like when I hear the voice in my head going, oh, this trade, when I see this, I'm going to be stopped out. And then there's a part of me, and I call that Hyde, Jekyll and Hyde. The part of me says, why don't you bail out? Don't take the stop. How many times have you done that? And then the trade goes on. And it could do either. So it's not about knowing. Since we know we don't know, you have to let it, it's up to you. Me, I let it take me out. Doesn't take me out. Now let's assume I'm not in the trade. Let's take it another way. I come down here, I think the trade's going to fail. And then I get a buyer. Let's look. How might I get into this trade? Well, if I didn't get here, and if I wasn't in here, I break high, and I'm looking for a reaction right there. You see the seller? That's retail mechanical traders. They're like lemmings. They all do the same thing. Well, if the trend is up, would you be getting short at the VWAP? Well, for me, I want to be scaling at the VWAP. Now, right here, I see a sweep. And I know my next resistance is going to be right there. Variable high volume node. I got to put it in here. By the way, if you have questions, post them. So I'm back on the long. Now, it's not the easiest trade in the world, if there is such a thing, because it's rotational. So the idea of trading rotations is just to try to get an alignment, and then you got to manage your trade. Remember, what was too high? Well, up here. So let's see where it goes. Here. Okay, let's look at trade management now. Now, I haven't seen any of this, so I don't know what's going on. So trade management. Too low, chop, 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 break high, support, chop, 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 break high, support, chop, 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 sellers here, you notice the line, absorption, break high, support, chop, 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 break low, support, break high, going to the moon, support, support, break low, selling trigger, you can see where it is here, and you'd be out of the long, if that's how you want to manage your trade. Or, here, let me give you the or you're way back here someplace. That's individual, and it has to do with the rotations you trade. So now, here's your choices. Subject to your plan, you're just out of your long. If you trade both sides, we're still in something called mean reversion. Remember, the longs are mean reversion. And if you get a short, the goal is to come back to the mean. That's this. So, and I'm just saying this is a mean reversion short. It's not your trade. It's not your trade. Doesn't matter. You could just be taking one side, which is longs, or you could trade both sides subject to having an edge. In other words, you got to know how to trade both sides. When you're a developing trader, in my opinion, it's better if there is a dominant side and it isn't just a two-sided shootout, which means just both sides sloshing back and forth, which is also a specific condition. If we think the trend is up, maybe you only take one side. You just use this for an exit, not a short back to here. You could. If you're more experienced and you're already consistent and have your emotions under control, and you have a process that's vetted and you're comfortable with it, start out with one side. Otherwise, you're going to end up with FOMO. You're going to end up flipping and flopping like a fish on a flounder out on the dock, and you'll just chop yourself up. You want to develop the discipline and the ability to build a business. If you're interested in longevity, you got to build a business. This is not plug and play. The illusion that or fantasy that retail traders have is that somehow you throw indicators and time frames together, and now you go down the basement and you just take a withdrawal when you feel like it from your ATM. No, it's not the business. Sorry. The business is methodical. You have to be consistent and anchored, like the casinos are. They only play the games exactly the same way. That's called anchored inputs. I did a primer webinar, and it's available to all of you at no cost. In fact, the Trader Lab's available to you at no cost in the Bookmap Discord server. There's a link in the bottom of YouTube, and you watch that primer webinar. It's got about 31,000 views. It's a high-level overview of what you see me do here every day and why I do it and where I've come from, which is the same place you've come from. The difference is I don't do what I did for years because I kept waking up in the same place and I couldn't figure out why it wouldn't work, because it would work. Catch 22, it works, except it really doesn't work. It's just random. When you have random inputs in a 100% random environment, what do you get? Garbage, and winners and losers. But when you have a plan that has an edge, and just like the casinos, they only play games with an edge, they can measure it. Then they know, should they keep playing that game? And if it is profitable, every time somebody sits at the table, or in our case, there's an opportunity that aligns with our plan, we take the trade, because it's like making sauces. You're just pushing dollars through a probability or an edge, and the dollars come out. It's no different than any other business. You push gross dollars in, you pay your expenses, which in our case is stops, commissions, and you get a net. That's it. That's our business. Anything else you're doing is just fantasy and a video game. I suggest you go to the arcade if they still have those and play the video game there. This is business. You want to learn the business, that's what the Trader Lab is. So this is too high. There's a trigger. And let me show you the trigger. Now, what do you do with it? You narrate. And in fact, when I was visiting with this Trader Lab participant this morning, it was all about the narration, not the prediction, the narration. So here's what look at this thing. All this is going up. Do you see any reason to be out? You see the language? See the language? Now here, this is questionable right here, but I'm above the buyers here and the buyers there. Passive. Buyers are here, sellers are there, sellers are here, sellers are here. My support is here. And then I get my buyer here. Right here, the buyer's above the sellers, we're going higher, right? And then bang, look at that. I got my iceberg. And now there's a change in behavior. Can you see the behavioral change? If I recognize this because I've spent, I'm going to say years, but you don't have to spend years, isolating triggers. So I see when there's a change in behavior based on the auction, and I have a trigger. Now I want to either, using a trailing sell stop, get taken out, or I'm going to blow out. I'm going to hit the eject button and the canopy blows off because I'm below this volume. Does that make sense? Yeah, Antonio, that's correct. Antonio's asking that the short to the overnight VPOC and only after it got hit, we be looking for the reversion trade long. That is correct for me. Now, that doesn't mean, of course, that you get to the overnight VPOC initially and then it's going to turn around there. It's a location of behavior. The thing about the auction is they're levels, they're not walls. So I don't know, like when we come back up here, I have no idea that it's going to do this at all. So that's not the business we're in. We're in the business of alignment, not prediction. So right here, as far as I know, we're going, north until it isn't. Then that's why we use trade management. Then if you don't have a trade here, you're just out of your long. Or if you're more knowledgeable, you might take a short to come back here. It's called mean reversion. It is a specific plan in a plan. It's more advanced. So that's what I'm saying is when you're a developing trader, you just try to get on, the long, let's say here, the longs, and you're exiting here and then you're done. That trade's over and then you're not flipping. Now let's come back here. Now, I haven't seen any of this. Doesn't really matter. Let's look where our stops are. So we know where the low is, somewhere down here. And this is the retail price. So I can come back here, okay? If you took the short, this is where you're trying to go. Primary. Let's watch. See the behavior? And where do we come back? VHVN, this is an important level. It's yesterday's high. So we come back. I have a level. And I look right here. Sellers are below these buyers. Sellers are here. Sellers are here. You might not be able to get into this because look at it. So it's not your trade. I might not be able to get into it. I'm just looking here. The volume, let's look at the microstructure. Now, so if I have a trade and I can't enter well, I just wait for the next trade, So let's look at the structure here. Up, 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 up. Yesterday's high, and this was an important level from yesterday, okay? We know we have our sellers up here, and we don't know where it's going to go. That's the way it is. Buyers are here. Sellers are here. Seller is here. Seller is here. Seller is here. Seller is here. And my buyers are in here. And then I break. So I don't have a way into this trade. I'm just telling you. It's a trade I would take if I had this just right here is really rough. This is a trigger. This is the resistance. This is resistance. You would have to be getting short here. It might be hard for you to do that. This is where you really have to understand order flow. Now we know there's buyers here, right? That's why it's going up. So the sellers are under the buyers. This is the key right here. But you would have had to enter in here. And I don't enter on the run. By the time I'm conscious, it's over here. And then my stop has to be up here. So, And then you're going here. This is the trade. You're still in mean reversion. Oh, we're current. Any questions? Looks like we're current. How are you doing in YouTube? Please give a like, a thumb up. I hope you like this. By the way, there's a link in the bottom of YouTube if you want to visit TraderLab. It's no cost. And there is 60 PDFs you can download of these trades. And now, it's not a course. It's to help you reverse engineer and understand what's going on here. And I think I can show you, like these are actual trades I've taken, you know. And some of these are from, this is the IBF setup, the one I just took. Let me just see where it is. Yeah, this is a short from the top side versus a long from the bottom, but this is the same trade. So this is a short back to VPOC, mean reversion. So we had a long coming back around the other side. So that was a short, and then it turns into a long over here. But this is the actual, some of the ideas. You can kind of get an idea on some of these things, how this works, why this is a long. Which one is this? Range extension here. This is an IBF. This is the trade I was talking to Antonio about. This is a long back to there. There's my target. Then target number 2. So this is a trade. Then here. Okay. So got 2 of them, and this was the 3rd one. I don't remember. You know, I don't remember any of this stuff. This is from, I don't remember one. The S&P was at 3,300. So I guess that's a while ago, huh? Anyway, this is available to all you guys. There's a link, and there's order flow phenomena. There's even some higher time frame stuff like I show at the top of the stream when I can. Where is it? Whoa, 60 of these. You know, there's a lot here to, well, I don't know where it is. But you can see there's a lot of stuff here for you to look at. These are just things I shared. You know, the Trader Lab is a good place, I think, for traders who want to up their game, who maybe want to find out why they keep waking up in the same place. And let me see if I can show you this. One second. I got to switch computers here. Makes it always interesting. So this is the Trader Lab community. This is what's going on here. So there's a lot. Thanks, Ned, for posting that. Charts, discussion, trades, conversation. It's the leverage of the community. In other words, what about this? I think we have this trade coming up. Is that a structured trade? Where's your target? What about this? You know, it's everybody. It takes all of us. This is the vocabulary of the terms that are used there. So you can see there's a lot going on here. And it starts early. I mean, it's trading 24 hours. And I'm in here, guys. This is about context, risk management, trade management, and getting the shorts out who are now fading. So that's the squeeze, you know. So that's why we're looking for the longs to squeeze the shorts. It's always rotating. The IBF gave scales, you see. So I'm in there. Everybody's in there. It's a great community. You're invited. Let me show you these webinars too. You hit the pin at the top, and this is the one with over 30,000. That's the primer one. Start with that. And then are you a trader or a gambler? Day trading, why most traders using indicators fail. You might be interested in that. Are you trapped in trader groundhog day? That was me, working hard, curve fitting, and waking up with the same results. Trading high volatility reports, day trading inside higher time frame trends, trading gaps, you know, advanced trading methodology, and a lot more. And there's a whole library of these starting in 2022. Trader Lab's been around going on, well, a couple of years. So it's free. You know, like everything, we don't know how long that'll continue or how long I'm going to keep doing this. But while it's here, I don't think there's a better community anywhere because it's serious. It's about the business of trading, and you're all invited. You can use that link in the bottom of YouTube. Hey, give a like while you're at it. I hope you like this. You guys have questions. Now's the time to post them. So what's going on here? This was our long for the IBF. Now, the fact that we have not been able to get up here at the moment, we have to be cautious. But we're in rotational trading. So you could be like, if you didn't take this one, you could be long here. You would have resistance here, trail your stop, get taken out. If you were able to get short, you would take it down to this level. This is more rotational trading. You know, I prefer, and when I say prefer, it's just, of course, you can have a preference. I like the 15, 20-point runs because it's all the same from a risk-reward point of view. When the rotations contract, my risk is pretty constant. So I personally like to get paid. So I take stops like everybody does. You're not going to avoid stops. It's like being in business and not wanting to pay bills. It's cost of production and overhead, not personal failure because, quote, you were wrong. How do you measure yourself in this business? It's not by your P&L. It's by following your plan. And your plan has to be vetted, so you're only interacting where you have an edge. Now, this sets up a trigger. This is a trigger. You can see it. It's right there. Where's my resistance? Right now, it's here. So do you want to trade in this range? I think that's pretty hard, but I think it can be done. You know, if you understand structure, you'd have to be very disciplined. And these are not trade recommendations. I'm not saying I would trade this because this is where my obstacle is. So if I get long, I must get long here, a limit order. And if I'm going for this, I got to have one tick before there, a limit order. This is my range. It's like 2 points in a bit, but my risk is going to be from here down to here. So you can see it's, 1.5 points, 1.75, and I'm trying to get risk neutral here. If it doesn't work, I take a stop. Should I be risking a 2 lot for risk neutral here to come back across the range? That's up to you. Let's see what this trade does. Ask yourself right now, would you be getting long here? You have to answer the question mentally before you know whether it's going up or going down from here. What is so hard for us is the uncertainty. Because, and you should write this down, we're in an environment that is 100% uncertain 100% of the time. That's why we try to create certainty and the word confirmation. When you say confirmation, that means confidence. And in this business, there is no confirmation. There's only maybe. Maybe this is too low. Maybe this is support. And maybe we'll come back here. If not, maybe we'll take a stop down here and the trade is over. That's all you got. You're not going to find anything more than that in trading because that's what trading is, maybe. So maybe we'll get here. And if not, maybe we'll take a stop. Does that make sense? Are you guys following? So we're going to see what happens here. What happened here? Let's just see. Sellers got absorbed. The buyers are here. Now we can still pop this a little bit and still go up from here. Doesn't mean we will. And right now I see my sellers are here. My sellers are under my buyers. Buyers tried here. They failed. Sellers are in control now. So what I need to find out is, are the buyers that were here, are they going to still see this as a deal and they're going to buy it? So I know this is too high and I know my buyers were here and I can test this. And if it's still too low, I will rotate. If it's not, I'll just keep going. So let's watch it. This is where you have to, on the trade desk, we used to have a bottle of Pepto-Bismol. Big one. So your emotional state right now, if you're in this trade, is saying, I want to get out, I want to get out. Which I understand. We all feel the same thing. And that's feel. Remember the word feel. So, and that may or may not be what is going to happen to this trade. In other words, do the buyers, and you see a buyer right now, do the buyers show up here where they were activated before? And it can take out this low and still just pick stops under here and then reverse from here. So that's why, at least for me, my stops are not there. They're a couple ticks away, just in case I get something I call a stop pick. So let's watch now. We're getting into the stops under here. Let's see what it does. So if this trade's any good, it's going to reverse here. Let's watch what it does right there. 1 second, guys. Sweeps. See what's going on? Let's just watch it. Is everybody tracking? Now, as we say, real time, right? Doesn't mean anything. It's just what might happen. That's all you got in this. Remember, we want to be a couple ticks under here, right? Right here, we need it to reverse. Either going to reverse or it's going to fail from here. That's as deep as it gets. That's as complex as this is. Because my buyers are here. I had a sweep here, and I might be able to reverse from here. Because I see the sweep, and I have microstructure here. This would set up a long, and it's not a trade recommendation. This is very muddy. So it's just sloppy. You have to decide if you want to trade in this. My goal here is to show you market mechanics. I can't tell you what's going to happen. I can tell you that we're making lower lows here, and if we don't hold this, we're just going to keep going down. It is Friday, and long liquidation is not unreasonable, which we also talk about at the top of the stream. But nobody predicts. It's like, yeah, okay, we might get long liquidation. All right, when's that going to happen? I don't know. We have longs in the market. Friday, there's a good chance for more selling. Doesn't mean, though, that the shorts that are currently in here that are selling this market won't get squeezed. So when we're looking at this, we're looking at locations of behavior. So you have to be just looking and determining where's your trade fail, and right now it's here. So the long would fail under here. If it comes under here, then, so I got this, which is right now a stop pick. I have absorption. I have a sweep, and the potential is to come across if it's going to work. If it doesn't work, it's a stop. That is about it. I wish, so I can't do anything more than look at where the behavior might happen, understand the condition of the market, understand that the shorts in this leg might get squeezed, and understand that if I'm going to get long, I got to be doing it here. And then whatever happens, happens. Any questions? Can you see what I'm doing? Do you see the methodology? So now we have to, this is the volume point of control. So now we need to come out here and get these guys. That's the objective. And come back to VWAP. So this is depends how you want to look at this trade. You could be long here, back to here, or waiting not long and looking for a short to come back to here. This is an outside edge. It's a low volume node. This is a distribution. What we're trying to do is go around this thing. So if it doesn't work, it doesn't work. So it's time frame specific. Some traders are going to be short and that they're just going to sit waiting for the bottom to fall out. Other traders subject to time frame might take long back to here. You see the differences? How do you sort this out? Do you want to be long or do you want to be sitting short? Isn't this an interesting question? Is it possible you could do both or be one or the other? And that might be confusing, right? So what's the answer to this? Maybe the answer is you have a plan and then you trade the side you think is dominant and you only take those trades. So if you think you want to be short today because of Friday and all the other things, then you're only going to take outside edges to come back here. So shorts back to here. If you want to trade counter trend, depending what you call the trend, don't forget. Because is the trend up or down? Depends on time frame or fractal you're trading. So it could be a long to here, or if we rotate up, a short back to here. It could be both. It could be neither. It's all trade plan specific. And we have about 10 minutes left. If you have questions, ask them. I'm not saying either which one is right because I don't know. I think you have to know before the fact how you're going to be positioned in the market. So is it short? Maybe. Looks like it, doesn't it? Selling, retracement into resistance, heavy selling. So it looks like shorts, but it could be a rotation long. So it's one or the other, right? Final questions. And please give a thumb up, a like, and also visit the Trader Lab. Use the link in the bottom of YouTube if you're inclined. So I'm always looking at the market from both sides. I'm always thinking about who's dominant, and also can I get a counter rotation? If I'm looking for counter rotations, it's going to be at locations, which would be out here. If I'm sitting short, then I'm just going to manage the trade and get taken out. It's one or the other. You can exit on a reversal trigger, or you can exit on a trailing stop. The micro high volume is here. The buyers right here got absorbed. You can see it. Here's where the buyers were. Here's where the sellers were. Here's the volume. Here's the break. So in a micro structure, there's your test. So we have our support over here. We have our volume point of control here. This is neutral zone, basically. So you're trying to come out, come across, and you got to clear this to squeeze up into here, which would be the trade. If you can't get back above this here, then we can fall out the bottom. So you can kind of look at it, I think, from a couple angles, So when you break below this, that's resistance. So if I got long, I'm really looking for it to come back here. If I don't want to get long, I'm looking for it to come back here and then sell it or not. You got to see what happens up here. So it looks like it's not going to do anything for a while unless it might break. That is possible. But that's the structure. And then your plan and your perception of the context suggests which trades you take and where they will be. I mean, some traders are going to trade counter trend. Other traders are only going to trade with what they perceive to be the intraday trend. Where is the low of the day? 44.50. Oh, this is that low of the day? Okay. So if you're short, this is trade management here because it's selling below it. That's resistance. You get a sweep here, which suggested rotation up. This is your resistance. There. You get your seller buyers here. Sellers are below. This is resistance. We have support here. So, and if we get below here, then we're moving down to the next level. If you're short, you're doing okay. If you were taking longs, you didn't get anywhere. Got a rotations. So, my objective here is to help you read the market. This is a possible target down here. Low probability to get here, but looks like we might. And then we have this 33 and change. So that is our target. Trader JMB, the NQ is very thin. So it really is a much more difficult market to navigate because it doesn't have any depth. So it's easy to get skidded and it doesn't respect levels and blows through them. So it's, in my opinion, it's not a good market to trade for developing traders. You really should be thinking more about a less volatile market. ES even has a lot of volatility in it, but it is, to learn trading, you want it to be slower so you can begin to read it. Because it's like learning to read. Like if you're learning to read, you're not zipping along. You go slow and intentional. That's how you learn to read. And this is the same in the sense of a foreign language. So we're trying to read a language. Let's look what's going on right here. Liquidity here, market still has targets down here. You can see these are over here. So as far as I'm concerned, this is a potential target. And it's the naked volume point of control from yesterday. So in other words, remember how I'm working these retail prices? So this was the retail from the ETH and we were using it for a long. Well, now we're below it. The last retail price now is this one from yesterday. So that we can come back here. Is this too low? So that sets up the target. So what you had was long up and then break below, and then it sets up potential short down. And you could have taken shorts higher up or not, whatever you want to do. So right now we're moving towards this. So this is the target, not a recommendation, and never has to get there. This is part of the joy of the whole thing. Are you guys tracking? Does it make some sense? Please give a thumb up in YouTube, a like, subscribe to the channel so you get notifications when I stream. If you're interested in the Bookmap Discord Trader Lab community, use the link in the bottom of YouTube. Say hi. Come on over. Be glad to say hi, meet you. It's a group of like-minded traders who come together. The whole idea of Trader Lab is that there's a lot of work to do in trading. Research, statistical analysis, sharing of ideas, discussion of trades, all that. Triggering structures, and there's the library of webinars. If you watch these webinars, and some of them are up to 5 hours long of real-time narration that I've done, you can see this unfolding as the market is changing and the different behaviors. ETH low. So let's watch the behavior. Wonder what that is. Well, JMB bonds are a good market to learn on because they move slow. They're good for learning to read. It doesn't matter what market you do this on. This is how markets work. So if you understand how a market works, you'll learn. So you can pick any market you want. So this is too high. It's resistance right now. Let me just mark this for you. Whoops, didn't want that. So this is too high. There's your sellers. Here's your buyers. There's your break. So now we have this area in here is a low volume area. We can come back up into it, and then we could still be going down. Please give a like. I'm out of time. I'm up in YouTube. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. Be sure to download the 60 PDFs. And this weekend, watch the primer webinar and any other ones. Watch Trader Groundhog Day also, because we've all been there, and a lot of us, fortunately, still are. And I don't think that's not the solution. It's part of the problem. Please give that like. I look forward to seeing you guys. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, etc. If you're interested in taking advantage of these tools, they're all available at no cost, as well as the Trader Lab and the education. And there's a lot of additional education in the Bookmap server: stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. Thanks again, guys. Don't forget to give the like. Helps the stream, and it helps other traders who are interested in improving their business. Take care, guys. Have a super weekend, and I look forward to seeing you on Monday. Trade safe.